Welcome back to the channel, Crypto Trend Trader, with a quick update on some cryptocurrencies. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Before we get started, I'd like to remind you that all the indicators that I use are in the description for the videos down below, as well as quite a few other tools and resources that are all provided free to the community. If you don't mind liking and subscribing, if you're new to the channel, you know that you can ask any kind of questions or specifics for like technical analysis you'd like to see down below in the comments too. More than willing to check that out, not just cryptocurrencies, but any assets or charts that you're interested in. And also, quite a few people had expressed an interest in me doing shorter videos. I try to jam as much informational content into these videos as possible to help people learn. Try to do a video like every day or every other day. At this point in time, you got to just skip through and, fast forward and then slow down for the important parts, or skip the assets you're not interested in. It's just too much work for me to try to edit down longer videos and put out a shorter version of the same video. It takes forever to edit, upload, do all that stuff. And, there's a lot of people who do want maximum content. I know there's a lot of people that just want like a quick little 10-minute video. So maybe I'll alternate between like a 45-minute to an hour video one day and then like 10 minutes the next day. But honestly, a lot of times I do get on here intending to make like a little 10 or 15-minute video, and the next thing you know, it goes 45 minutes. So, got to just take it with a grain of salt. If it's too long for you, I'm sorry. Fast forward, skip ahead, or, if it's not the channel for you, it's not the channel for you. So, all right, we're going to get started on Bitcoin. Everybody knows that for quite a while now, everyone was looking at this symmetrical triangle. I called out very clearly exactly what was going to happen based on previous experience, that we would basically have a symmetrical triangle shaping up, and then eventually, everybody was going to get bullish and think it was a flag breaking to the upside, and then we would actually break to the downside, put in a flat bottom support, called out the exact flat bottom support ahead of time, which we did bounce off of. We then came back up and tried to get a retest off of the median line. This is Wyckoff distribution taking place. We essentially top out right here. We break down, find support. We come up to a new all-time high, and then we come down, retest that support, come back up, put in a lower high, and then we retest the previous high before entering the pattern, put in one more lower high, and then come back down, test the low. And that's when it becomes very clear, obviously, that we do in fact have a descending triangle, at which point in time you would expect it to fill out this range while the distribution takes place. The price is being propped up with a buy wall on the bottom here. And then meanwhile, every time the price pumps, it goes lower and lower and lower because people are losing optimism in this asset. And then finally, the asset will break down to the downside. And I have literally been saying for, I don't even know, a month or whatever now, that we would be coming back down to this 18,900 range. And that is the measured move. If you take this, I am on the log scale, so as I move this to the downside, it looks like it gets bigger. But that's just the measured move of the pattern. A lot of people like to use the flagpole. I don't think that's realistic. It is possible that we would get down lower, but we're not just going to drop down there. I like to just use the meat of the pattern. So in this case, that's going to bring us back down and fill our CME gap. We also have a CME gap around that 24,000 range as well. We're not just going to dump down here in one single move. We're going to break down from support. Then it's going to look like a descending channel. Then we're going to break down again. We're going to continually retest the highs. But in the end, I'm going to be right. In the event that I am wrong, which is always a possibility, we could break out to the upside, get continuation. But this pattern right here is clearly Wyckoff distribution, and basically has like a 66% chance to success to the downside, 34% chance to the upside. So it's basically 2 to 1 to the downside. So, if you're doing like if you're a betting man, obviously the bet is to the downside, and you're wrong if we break out of the top. Now, technically we only have, 2 touches on the top. So at some point in time, 2 touches on the bottom, 2 touches on the top, I would expect us to come back down, find support on a close somewhere in this range, which it looks like we're just about to do, and then come back up, get a retest back up to the top of the range, which we failed to get above like that median line, the green line right here last time. But it's not unrealistic to think that we could still come back up here to like 36, 37,000. But we did exactly what I said over the weekend. We just oscillated within that range, that futures range between those moving averages, you know, and then basically just got like a little extra strength at the end. I think I said we were going to oscillate between, you know, the bottom of the range, 30,000, and the top of the range would be 34,000. We pumped up right before market opened today, like traditional markets open today, to like 34,500 or something like that. You know, everybody got extremely bullish. Looked like we were going to come back up to the top of the pattern. And then look, we sold off that entire move, you know, one candle after another, just bearishly selling straight back off to the downside. Now, are we going to put in a lower, you know, our first low was 30,000. Then we got a wick down here to 28.8. So are we going to put in a lower wick right now? It doesn't really matter. I'm looking for a close. 4-hour close just inside this range is what I expect. So when we start to show strength again, if we start to get a wick that gets bought back up, you know, I'll get back into it. But it's playing out exactly like we talked about. Now, the thing we're paying attention to right now is, let's go ahead and let's get rid of this one. Thing we're paying attention to now is these two Fibonacci's. The first one was from this previous high right here, or previous low right here at 16,000 before the breakout to the upside. You know, that was basically like the consolidation, double top, and then break to the upside, where we put in an ascending triangle, which again is like 66% to the upside, 33 downside. When we put in that base right there, we're going to take the fib level from there at 16,235 up to our top right here at 42,000 basically. And then that's going to give us our green Fibonacci levels. When we came down and touched that 236, we confirmed that we could potentially be fibbing and topping out. And then, you know, obviously that big move down was to the 382. That second move down, you know, this is basically just coming down to the 382. Is it possible we get a 382 retracement and then continuation? Of course. But at this point in time, you know, you got to go with the favors based on like, you know, patterns, previous trends, etc. So I'm expecting us to come down at least to the 0.5. Which is going to come in at 26,425. You know, again, we could come down to that level, come back up, retest the breakdown point at 30,500, and then get continuation. But, you know, the 618 would be at 23,300. 786 is at 19,898. And then just below our measured move is the final target. You know, without getting a 100% retracement of that move, and that's 18,044. So those are my targets to the downside. Now, when we zoom way out here and continue looking at the big picture, you'll see this blue Fibonacci is from our bottom sell-off here in March back down to 3,800 all the way up to 42,000. So that's assuming that this was all just one big wave, you know, and that we're going to sell off the entire thing now, which I think is less likely, but still possible. In that event, we would know for sure that we're potentially fibbing that out when we get down to that 24,000 range. When we fill that first CME gap on futures, 23,749, that's going to give us the 236 of this entire move right here. At which point in time, you know, once again, I would expect a retest, you know, stair steps along the way. But if we break this triangle, it's going to start looking real violent real quick. And then from the 236, which was obviously a key resistance point here, the 382 would be the next. That would be at 16,846, just past our measured move target, you know, basically the flagpole target. And then we could literally get down to that 382 at 16.9, and then everybody would get extremely bearish. We broke down below all-time highs, didn't find support at 20,000. This is it. It's done. We're going back into a bear market, and then bam, we break back to the upside, get continuation, new all-time highs, crazy targets, you know, maybe even six figures, who knows. We could also come back down to the 0.5, which was basically where we put in that head and shoulders. That's going to put us about like that 13,000 range, 12.7, or the least or the largest retracement I could still say bullish on for a, you know, continued move to the upside would be like a full market crash, but a 618 retracement of the macro, which would be 9,586. If we fell below 10,000, I think people would lose it and say this is a dead asset and it's crashing and it was a bubble and all that. We could still find support at 618 and get continuation. Anything past that, I would be extremely skeptical. You do want to pay attention, though, how well these different levels of Fibonacci line up with different levels of support and resistance the entire way up. That is quite a bit of confluence, which makes me think that we were on the right track, as well as here from the bottom, once again, we're finding continual resistance and support at these green fib levels. It tells you that basically the bots, algorithms, and experienced traders are looking at the same thing as you do. So now if we zoom in here just a little bit, you'll see that, I essentially had a couple of these parabolic trend lines in place. This one was literally all the way from down at like 10,000. It was a resistance line that I had extended up here, and it kept acting as resistance. It actually goes back way further than that, but we're just showing the relevant part. We broke above it, found support, broke above it, found support, broke above it, found support, broke, lower high right here, came back down, found support, support, and we just broke down from it. After we broke down from it, we just retested it for resistance. So again, I would expect us to come back up after we bottom out right here, assuming this triangle doesn't break. Retest back up. Once again, we could break above it. We could come all the way back up to the top of the triangle at like 36,000 and some change, and still just range out in this. Typically these things go at least like 66 to 80% roughly before they break. So, just a rough target would be like, middle to end of February for this thing to break to the downside, but it could easily happen before then. But we are at the bottom of the range right now, getting ready to basically purchase some more spot, close out our short position, and essentially take those profits, purchase spot, and then look for another bounce to the upside. But again, you don't want to get too greedy with this, and it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Next, let's switch over to, actually I'm going to switch this one to the daily real quick. This is just another Bitcoin chart. This on the daily, these are our moving averages. We've talked about this quite a bit. We were able to basically save every moving average cross between the 8 and 21, with the exception of that head and shoulders breakdown from 12,000 that took us back down below 10,000. So here we are for the first time since 10,000. We ran all the way up to 42,000, and we have confirmed a daily cross to the downside between the 8 and 21. Exactly like I said, we would bounce the 55, come back up, retest the 21 and 8, try to get above it. We put in this, shooting star, basically the top of a move. Price gets smashed back down. You end up with a massive wick with a tiny little body and then a rejection. I would expect it to take us straight back down here to that 29,275 range, right back down to the 50 exponential and 55 simple. 55 exponential and 50 simple, the two green moving averages, at which point in time, we bounce it, get a lower high, etc. Possibly try to break to the upside one more time. But we do have the parabolic SAR in place. It is red. It is to the downside. It is telling us that we are in a confirmed downtrend. It is beginning to, you'll see the slope of the SAR was mild here, and then it started to accelerate. As this continues, it's going to continue accelerating faster and faster towards price, until eventually we take it out, and then we get basically like a consolidation back to either a sideways consolidation or move back to the upside and re-enter an uptrend. You'll see TDMACD called out the perfect top right here. You'll see where this rolled over. That was the absolute peak in price action. We then got multiple histograms in a row. We've only gotten one green since then. The slope was blue and to the upside. We flipped the slope back over red now. Once we lost the slope as support, it flipped over red. We are in a confirmed downtrend. Same with the Jewel Thief. Called the absolute top with the hard sell signal. Left the bullish control zone. Bulls lost control when we left this red area. And then the Stokes, crossed obviously at the hard sell, left the bullish control zone. You'll see it flips out of that red as soon as the blue leaves. And then we've been in a powerful downtrend since then. We have gotten a couple of stabs of the knife. But, again, a stab like this is good and everything. But we are looking for a massive stab like this, an outlier, to tell us that we have, potentially had the biggest sell-off of the move, and that even though we might make lower prices, that was the majority of the energy being expended. And you can see an example by, this was our biggest stab right here. We broke through a key resistance that was holding us down at that 20,000 range. That was our previous all-time high. That was our biggest energy breakthrough right here, but then we continued up still to double price after that. So again, we're looking for a massive stab to the downside like that, a red knife coming in, at which point in time, we would assume that was the break of a key support level, and then we would look for a key moving average or Fibonacci to find support on after that. But again, the move could continue on for another, this was 100% more move to the upside in price action. So, could we get another 50% down? Maybe. It's not realistic, but, it could be a massive move still. But yeah, we're paying attention to that. We are getting ready here. This blue is very close to entering the bearish control zone on the daily. When you're in an uptrend, those are the best places to buy, to accumulate. But we are likely flipping over that, uptrend into a downtrend. Does not mean it won't be a good place to accumulate if we find support at a key level, but I don't want to be rushing in here and just get caught holding bags like a lot of people did from 20,000 previously, where they had to hold those bags for 2 or 3 years, suffer massive drawdown, capitulation, time capitulation, price capitulation, etc. So if we come down to the 89 moving average, it's starting to level off at 25.7. If we come down to the 200 exponential, it'd be right in that 21,000 range, 20,000 range. And then the 200 simples like at 18,000 or so. So again, they're going to line up pretty well. Everything's lining up pretty much perfectly for this move. So looks good still. Everything looks like what we're expecting. So it's very predictable. It did the same thing at $20,000 in 2017. Did the same thing at $14,000. The triangle, descending triangle breakdown, all that stuff. Everybody talking about, we're going to 1 million. You could buy any, back then it was the altcoin bubble. This time it's the DeFi bubble. Same thing all over again. So first time it was wait till the institutions get here. It was retail driven. This time it was the institutions are here. So once retail gets here, and then eventually we'll get an actual, move up where retail and institutions are involved at the same time. But I just don't see it right now. It does not look like that to me. Typically, and real quick before I switch over to another chart here, people act like there's a limited number of Bitcoin, therefore it has unlimited value because of its scarcity. And then also obviously like its store value is great and it's digital, so it's better than gold. But in all reality, if you're going to compare it to gold, compare it to the suppression of gold prices. As soon as paper trading came out for gold and you no longer had to worry about like, do you actually have a bar of gold in order to sell a bar of gold? You could then just paper trade, use leverage and short gold. And there's exponentially more gold contracts being traded than there's actual gold. Not to mention gold has a real use in, computer parts, jewelry, all kind of stuff. It's useful, same as silver. And they manipulated these markets for basically like 50 years plus. Probably were manipulating them from before that, but we have at least proof of that. I don't understand why nobody thinks it's possible for them to do the exact same thing as Bitcoin. It takes away the scarcity if you start paper trading it and using massive amounts of leverage. And it's not like people can't come in that are already, we have literal billionaires without leverage, single men that are worth billions of dollars. So it's not unrealistic to think that they could take, millions with leverage or use billions with their buddies and manipulate prices back down to unrealistically low levels, suppress prices for years, get people to capitulate from time, or from price capitulation. And then, like everybody says, the whole conspiracy of they're just trying to get your Bitcoin. That's how they would do it. They're not going to buy at ridiculously high levels, because they got to the party late. They're going to back the train up. They're going to load up the airbags. And then when they're ready, they're going to burst to the upside. So, JP Morgan is one of the ones that paid I think it was like tens of millions or hundreds of millions of dollars in fines, for basically like breaking laws on manipulating metals. They just recently got caught manipulating silver and had a massive fine. They closed their silver shorts for the first time ever and basically hung up all these other banks that had like hundreds of millions of dollars in silver shorts. So now they're all stuck holding the bag. So I expect basically, JP Morgan has essentially like filled up its bags with silver. So eventually once those other banks capitulate, we'll get that massive move to the upside. But that took place for decades before they filled their bags up. Same with gold. Central banks are likely holding down gold prices right now to make sure they don't go through the roof while they, accumulate behind closed doors. So if JP Morgan is telling you Bitcoin can go to $300,000 and, they're super bullish on it, they're probably telling you the opposite of what they're really doing. So they're probably planning on smashing down the price lower and then buying a ton of it and then they're going to come out and say it's dead. And then when they say it's dead, then expect them to close their shorts and then it to burst to the upside and actually go to those price targets. So, but anyway, think realistically, use your brain, don't FOMO. Let's go over to Uniswap next. Uniswap was one of the ones we talked about going into the weekend. I told you guys I took a long on Uniswap at $7.40. Looked extremely well. This thing has been staying extremely bullish. Basically took the buy after we saved the 89 moving average. I had previously bought when we broke out from our descending triangle. I believe it was right back here at like 450 roughly. So we broke out from that, came back down, retested it, second chance to accumulate here. And then after that second accumulation, the exact same thing happened, broke back to the upside, and then, came back down. I was expecting it to get a little lower. I was hoping for it to get a little lower, down to like 640, but it did not look like that was going to happen. It was staying extremely bullish during Bitcoin sell-off. So I took a nice position at 740. Rode it to the upside for a 63% gain without leverage. And then finally, when we started to top out here and it started looking bearish, when we took out the low, I was using a trailing stop loss. So when we took out the low on a candle close with this red one right here, I exited my position. And then, we did actually come back up even higher than that, put in a new high, but I'm still out of that position at the time. We are slightly higher than that, actually. So if I wasn't out of it, I would still have an opportunity to exit. But again, 63%, not bad for the weekend. And the other one I told you that I had entered was Polkadot. Was actually same situation with Polkadot. I entered a position basically back here when we broke out of this resistance level. On this one, it was around $6.30. Actually got into it a couple different places along here, so between 550 and 650 basically. Once again came back up, got a nice move, came back down, hit the 200 moving average. Took some more of a position right here as well, especially off that massive knife stab down. And again, that's kind of what we're looking for on Bitcoin when we're bottoming out. And then over the weekend, when we came down, I was looking at this triangle that we were putting in, which is an ascending triangle, a flat resistance at the top, and then slowly higher and higher support on the bottom. And I took a position off this one on the sell-off. Once again, it was extremely bullish. We came down to the support line, burst back straight to the upside, came down lazily to it. As soon as I saw us put in this hammer doji, we basically, on the way back up, I bought at, 15, it was like 1540 roughly. I did get optimistic on this that we were going to make it up to our 22 and some change price target, but unfortunately, it just didn't have the juice. But the juice was still worth the squeeze because that was still once we broke down from this support line here, it was still another like 16%. And you could have took profits like 20 times along here, which was great. 16% is great. But now it looks like we have lost that support on the downside. And, this is going to look more realistically like we will get the measure move to the downside, which again, I am out of my positions on this bad boy. I would expect essentially retest back down to the 200 moving average and somewhere around $12.60. So that's what I'll be paying attention to, looking for support along the way at like 15.25 or whatever. But, I like to position myself ahead of time for these moves, not like FOMO into them. Because if you did what Ethereum did or, did what DOT did right here, you bought the top and then you got wrecked off of it. That's the worst place to do. You need to anticipate and see the charts and see what's going to happen ahead of time, get into position. So, and then speaking of Ethereum, I am currently short on Ethereum from the top here. We basically got this is exactly what Ethereum did last time. Bitcoin came up, put in a high, and then Ethereum came up, broke out to the upside, and then sold back off. That's exactly what Ethereum did when it hit 500, months back. Bitcoin was essentially topping out, looking to put in that head and shoulders pattern, and then Ethereum came up to a new high, fake broke out just below $500, and then sold off violently back down to the 200. Would have been a nice buy. I did not long Ethereum, but I did short it here at the top when we essentially came up to that same resistance point again. Couldn't break through it. Got that wick up, rejection. Took the short. You know, I was actually like short from right in the middle of like this candle here. So it started to creep back up and look like I potentially was going to get stopped out here. But I did not. Currently up about 10%, a little less, without leverage. I'm in a leverage position on that one. But you know, it's about 9% probably right now, without the leverage involved. So, you know, at 5x leverage, it's like 45% of the position. So can't be mad about that. Everybody else was extremely bullish on Ethereum. You know, I'm just trailing my stop down here, continuing on down. And then, you know, if we take out a key level, you know, I'll potentially get bullish on Ethereum again. You know, turn that short into a long potentially, or buy some more spot and then ride it back to the upside. But again, you know, you got to just look at what the charts are telling you. The Stoch slope on this one, very simple indicator. If you're new and trying to find like some useful stuff, it basically takes the two stochastics lines, the blue and the purple, turns them into one line, and then it's blue when they're going to the upside and crossed over positively, turns red when they are going to the downside and crossed over negatively. And then it still highlights the bullish control zone, bearish control zone, tells you when you should be looking to get out of positions, gives you the hard sells and hard buys if it reaches those levels. Like here, it didn't get all the way back down inside of the level, so it didn't give you the hard buy. As we're here, we're inside the bearish control zone, and it gives you a hard buy. Flips over red at the absolute top. You know, obviously was a good move. Even if this pops back up and, you know, takes us out of our short position now, we'll still be in a very nice profit. So, yeah, once again, and then, you know, obviously TJD, TDMACD, same deal, you know, exact same deal again. Absolute top is at the peak of the histogram. You know, absolute top, close-wise, is at the peak of the histogram. There was a slight wick up here, which came in perfectly on the Stoch slope. So you can see why these indicators are so key together. And then once again, if you pay attention to the moving average crosses, when the 8 crosses over the 21, we get a massive sell-off. When it crosses back over 8, crosses back above the 21, red above the yellow, we get a massive move to the upside. So, you know, if we lose this right here and the 8 crosses below the 21, I would expect another dump down, probably to the 200 moving average or somewhere in that range. So, you know, $1,000 to $1,100 is my next target on Ethereum. And then I think that's going to do it for today. I'm going to keep this one relatively short. We can talk a little bit more about some different stuff tomorrow, go into a little longer of a video. You'll notice that the DXY dollar index is looking bullish, moving to the upside. Gold and silver are looking bearish. Miners are selling off violently. You know, basically everything I called out last week. That's why it's so important for me to explain these things to you. Is I'm not just telling you what I think is going to happen. I'm just not telling you what I want to happen. I'm telling you what the charts, what the indicators, what the price action is telling me, and then I'm explaining to you why and how I know that's what's going to happen. And it's not always going to be right, but if you've been watching this channel for, you know, a week or, you know, a year, you know that the majority of the time, very, very, very often, I'm in fact correct. So, well, there you have it, guys. If you like the content, if you have any questions, please feel free to ask them down below. Highly recommend that you go on TradingView and take advantage of all the free stuff that I do offer. Check out the course curriculum in the indicator series. Teaches you how to use all the different indicators, gives you the basics on them, and then it also has like some private lessons that I did for my group before. I may restart the group again in the future. I was very sick with the Wu flu a while back, so I ended my group just because it was horrible. I couldn't even like talk, couldn't do videos, you know, was tired all the time, had a headache. So I may bring that back in the future. It seems like there's more demand for it. But at the time, you know, it helps me to focus on, you know, my trading and, you know, enjoy this and not feel like a chore, not answering questions all the time in person or making myself available like, you know, 24/7. So, but I may bring that back in the future. But regardless, make sure that you like, subscribe, and share. People have been asking me also why my channel isn't bigger. You know, that's up to you guys. I don't have social media. I don't use social media. So, you know, if you want to share my stuff, if you want to, you know, get it out there for me, help me out, by all means do so. But I'm not on any of that stuff. I don't have Twitter or, you know, any of those things. I've never used them, never will. I have no interest in it. But feel free to share my stuff. I do have some stuff on TradingView, but it's just indicators and stuff. I don't even share my charts and stuff on there. Just share it this way, talk it through, try to help educate the community. So make sure you like, subscribe, and share, and I'll catch you tomorrow. Crypto Trend Trader, and I'm out of here.